5 stocks I'm buying July 2023. Welcome back to another Stock Dads video. In today's, we're going to be talking about 5 penny stocks that I do believe have high potential in the short term or the long term. Some of these are actually billion-dollar companies. Now, with penny stocks, you only want to invest what you can afford to risk, and obviously, you don't want to scale in all of your money into small stocks. You do want to diversify and have most of your wealth into ETFs and larger cap stocks. With that being said, penny stocks are kind of fun sometimes. So if you like this type of video, make sure to give this video a like, and let's get started. The first stock on this list is Finviz stock, Finvolution. This is a $1.3 billion company currently trading at about $4.60 as of this recording. This fintech company is primarily based in China, although they do have international operations in Indonesia as well as the Philippines. One great thing about this company is that they do have a very low valuation. The PE ratio currently is only about 3, so they're trading at 3 times the earnings that it made in the previous year. This strong profitability is what enables this company to pay a 4.5% dividend. So by all means, this definitely looks like a value stock, but they also have great double-digit growth in its revenue and in its net income in the previous quarter. And with the Chinese stimulus that's going out there, as well as reduced Chinese regulation, this company could benefit from a wave of increased consumer demand as well as small business demand. This is a company that's very similar to one that I mentioned previously on the channel called JFin, which has done really well, another really undervalued loan facilitation type of company. And I previously actually mentioned Finviz a few years ago, back in 2021. And that was a great time to trade Chinese stocks. This one went from like $5 to $10. So with all the qualities that I previously mentioned, this does have some potential to be a medium to long-term trade. Moving on to number 2 stock, here is Grab stock. Now with Grab stock, this is the Uber of Southeast Asia, and actually more than that. This is a $13 billion company with its hands in food delivery, product delivery in general, ride share, and finance. Trying to create this ecosystem of all these different services that makes their product very sticky, very convenient to use, and with a high scale of millions of customers, they will be able to reach cost efficiency and increase their profitability. This company is not yet profitable, having burned a few $100 million over the past couple of quarters, but they did achieve 100% revenue growth, which is very solid. And Uber is definitely not putting up that amount of growth in its sales. Of course, Uber is currently profitable. So it's all about trying to reach eventually in the next 1 or 2 or 3 years that end goal. Although they do believe and have said that they will be adjusted EBITDA break even or positive by the end of this year. So interesting developments there. This is still at basement prices. This has bottomed at $2 per share, but it has been rising, putting up higher highs and higher lows over the past couple of months. This could potentially reach a breakout point. And as they are fueling that growth and burning that cash, at least they do have a very strong cash balance if you look at the assets to liabilities, and a very low amount of debt. So this is actually a very interesting one as well, potentially for a long-term hold. If you're liking these stock picks so far, by the way, make sure to check out the Stock Dads Discord. That's where I post all of my long-term investments and short-term trades in real time, as well as my teams. We also offer mentorship, video courses, live streams every day, and a lot more excellent content for you guys. So check out the link in the description to sign up. Moving on to number 3, here is ENIC stock. This is a Chilean utilities company, a huge multi-billion-dollar corporation, by the way. And Chilean stocks actually had a great year last year, vastly outperformed the US stock market. In fact, the Chilean stock market was up, and some macroeconomic concerns have been avoided and some political concerns there as well. It's always kind of tricky to invest in a foreign country, but ENIC is a very interesting one to me because number 1, it does offer a 10% plus dividend, so that is huge passive income. Number 2, this does also trade at a very low valuation. Last time I checked, the PE ratio was somewhere around 3, which for a utilities company is still very, very, very low. And this company has posted really great revenue growth and net income growth numbers as well in the previous quarter. And for future quarters, this company is focusing on building up its balance sheet and transitioning towards clean energy, so that could provide more opportunity for growth in the future. The stock has also been on a seemingly infinite bullish run, little moves every single day or every couple of weeks, but it has continued to grind higher and higher and higher. And this was like $1 per share. Now it's at $3 and about $3.30. So a big run and really great bullish momentum on the chart. So can't really complain about how it's trading. So for the short term or potentially for the long term, this looks like a good one to me. Moving on to number 4 is Smart Rent stock, SMRT. This currently trades at around $4 per share as of this recording. This is a pretty large company, almost $1 billion valuation, and it's a real estate technology company, and they position themselves for people that have rental units. And even if you don't have a rental unit, but you want smart home devices or software for devices that allows you to control the temperature, control the security of the premises, and much more. This company does have a 70% revenue growth rate in the previous quarter. It is trending towards profitability, very close to only burning a couple $1 million per quarter at this point, and they do expect to become profitable very soon. With the real estate market, at least in the United States and in big cities, it has been quite resilient. There is starting to be a pickup in demand, and people are starting to get used to the higher mortgage rates. If rates start to come in a little bit towards 5%, I can definitely see the market for real estate improving and going back up. And there are a lot of new home units that are being sold by the home builders, and home builders have been doing really well. I think that there is an opportunity for companies like SmartRent to provide their services and provide their hardware for newer developments, and that could be a driver for future growth and eventually, again, towards profitability. And number 5 is going to be Rover stock. This is a billion-dollar pet care services company with its own app. And a lot of people in the United States are pet owners, whether it's dogs, cats, birds, rabbits, the dinosaurs, whatever kind of pet you have, they probably have some sort of services for it. The company does have strong growth, about 50% revenue growth and 50% net income growth in the previous quarter, but they are not, again, profitable. A lot of problems for penny stocks in general, as you can see, are that they're usually not profitable, but at least a couple of these on this list were in fact profitable. And we like to see that. It's always less risky, but if you do invest in an unprofitable company like this, there is potential for upside when they do become profitable. And they also raised guidance in 2023 and expect to get towards profitability, making progress throughout this year. And finally, when you look at some of the stats that this company has to offer, over 7 million reviews, 80 million services provided all time since 2011 when this was founded, and an 80% customer retention rate. So those customers are coming back, and many of the new customers are those that were referred by friends or family. So it has a very promising product, and with a huge cash pile and little debt, similar to other companies on this list, you can afford to be a bit more patient with this one as they continue to grow towards profitability. So that's it, guys. Those are 5 stocks I'm watching in July 2023. Finviz, Grab, ENIC, SmartRent, and Rover stock. And if you like this video, please make sure to give this video a like. It helps the channel out a lot. Make sure to subscribe so you don't miss another video. And until next time, my friends, good luck trading and investing in the stock market.